Hello everyone, welcome back to FX Capital Analysis. This is week 39 and we at the midweek review for this week. And this week going to be a very impulsive phase for most of the pair that we forecasting and across the board in forex trading. So personally, I'm kind of grateful that we trade price action, structure and pattern because this strategy is very sustainable, and whatever the market is doing, we wait for price action to develop and we enter the market. We have our stop loss, we have our risk management, we have our system and trading plan. So we just follow our trading plan, make ourselves very disciplined, follow the plan and execute where the market allow us to do. Other than that, we just control our emotion, follow the probability and possibility towards the market, and you're going to be sustained. There's some value I want to drop for this week midweek review, how I trade this market and how I keep going, how when I taking loss or I taking profit, and I keep my emotion very neutral all the time. So what you need to do is you need to have the purpose why you trading in forex market. So for example, if you have the approach to get rich quickly, the market not going to help you to get rich quickly because the market is very volatile, it's very unexpected, it's very unpredictable if you don't have the system. So the moment you have a system, you need to follow the system. When you have a system, you need to have patience when you trade the market by the system, because we need to wait for confirmation, we need to wait for the price develop, we need to wait for the correction or impulsive phase. So if you have the mindset to get rich quickly, you will take a fear of missing out position. So what I'm going to teach you is, if you have the emotion or the feeling to take the trade without follow the system, you will be in profit but you will be in loss. But this is very short term thinking, because you're not going to be in profit all the time when you take a FOMO trade, because FOMO trade can be profit, it can be loss. But if you follow the trade without the system, you take the FOMO trade, you will keep addictive in random rewards. So that's the value that I want to drop today. The other value that I want to drop today is possibility and probability. The book that I read and give me so much value is Trade in the Zone. What I'm going to give you is, you don't need to focus all the chapter in Trade in the Zone. Just follow and read multiple times in chapter 7 about probability. They will give you different mindset and change your perspective how you're going to trade the market. Either you trade different strategy. So that's all for value for this week, and we're going to start our forecast for midweek review and what pair that we need to focus for few more days before the market close. So we're going to start with Gold USD. Gold USD is very familiar for you guys. If we zoom out in high time frame, there's nothing I'm going to talk about this because I repeat multiple times in market week review. The price create biggest arc and has possibility to move down after the arc develop. So we focus in lower time frame. So past few weeks or this week, there's a multiple or second chance for you to enter gold market, because we have when the market at this stage, imagine this is still not price movement. We still at this position. You're able to trade in third position or third touch of this trade. However, price impulse to downside and move to the upside again, and you evolve the trend line. We got another touch, which is third touch as well, and in lower time frame we have a small arc to enter the position again. However, if you miss these two positions, we have another continuation pattern, which is the flag in this position. So if you miss these two positions, you're able to trade the flag. If you in community, you understand what is the flag pattern. So price create a flag, impulse to downside and move to the upside again, create another touch with double top, which is what we call the flag. There's a small flag and bigger flag, and you're able to take 1 hour retracement candle from here and sell to downside. So if you're able to capitalize this move, you're able to sell to the downside. However, price at this position now, so if you want to trail your stop loss, what I'm going to do is I will trail my stop loss first. Example, my position is here. This I will move to break even after price at 1%. So what I'm going to do is, if I will trail my stop loss to the next structure, I will always looking to the left what's stop loss position that I'm going to move. So when the price impulse to downside, so I will trail my stop loss from here. Have a price move to downside and move to the upside and take me out from the trade. However, I'm able to close multiple few percentage from this position. I will press to move to the upside now, and when price have impulsive phase, we must remember that price not going to move to downside straight away with impulsive phase. We must remember that after impulse there will be correction. So now go create one correction. I'm going to see how price develop. If I want to enter this position, I will wait price to enter this double top to sell this position again. So that's all for this pair. I keep it simple. I hope my explanation will give you the ability and understand what we're going to do for the next move. I try my best to explain in details. I hope you guys understand. If you don't understand what I talk about, just drop a comment. Next, we move to the next pair, which is New Zealand Canadian dollar. For this pair, in high time frame, we can see price at bigger descending channel approaching again this area. Want to create one arc in this area. We very familiar with arc, and this is lower time frame. What we're looking for is price start create bigger ascending channel. So this position we focus multiple times few last 3 weeks ago that. So what I'm going to wait, I will wait for the third touch for this area, and this trend line is a high probability trend line, so I'm going to sell to the downside. If I miss the opportunity to enter risk entry, if you're not in community, you're not going to familiar what is risk entry or reduce risk entry. Risk entry is not really a risk entry, we just name it as a risk entry because the price still inside the structure. So we're going to enter. If you miss the risk entry, you or I will wait for the flag, any flag from here, tight flag. What I'm looking for is move to the downside. If price create a steep flag, you understand the steep flag must have the area to retest. So if they create steep flag, I'm not going to enter in the middle of structure. I just wait to steep flag to enter this area again, which is we call the up and sell to upside. So there's a multiple flag that I approach differently. Hopefully you understand what is steep flag, what is tight flag. So if you don't understand, if you in community, just drop a question in Slack. Next we move to Canadian CHF. This pair quite a very good position last week and this week. So price developed and we have two 90% rules from this structure and bigger structure, and price create one correction. We zoom in. So what I'm looking for in this position, I'm looking for to price to create the flag or support by double top. So I'm going to wait for this area and sell to the downside. We still not approach our 90% rules. For first 90% rules, this area, if price move to the upside, I'm not going to wait and enter this position. We need to understand we have possibility and probability in trading forex market. So that's all for this pair. I just wait for this flag to develop. Maybe tomorrow or end of the day, let's see the pips. It's only 20-30 pips. Nothing can be triggered in any time. So another pair is British pound New Zealand dollar. British pound New Zealand dollar. I did evolve a little bit for this pair last week, so I wait for price to touch this area and move to the outside. So what I'm going to looking for is price to create a pattern or structure in this area and move to the outside. Either risk entry or reduce risk entry, I will decide later, because this pair quite a big size of pips, point of percentage, what we call the meaning of pips. So one candlestick can be 100 pips, so I need to be extra careful when I enter the position. But the percentage of profit is massive for this pair, so I just wait for candle shape formation to enter. Last pair that I personally focus for this week is Australian dollar, Canadian dollar. We understand the price already break the descending channel and create one bull flag. We in the structure area right now, so price impulse to the downside. It's very good, but last week we want to sell this position. However, price not approaching this area, sell is just a short term. However, I will set my alert in this area. So the alert is, I delete this one and add this. So I set my alert. How many pips to the downside is 48 pips. So we expected in 24 hours to price approaching this area and move to the outside and sell this position in this area. Okay guys, that's all for this week. We have 5 pair to focus for few more days. There's nothing complicated when trading forex, and you have the right system and you have the right routine, because the routine is the key to enter the market, to develop the profit, and to manage the live trade order to enter the trade. So routine is the key. Remember guys, if you don't have a solid routine, you're going to mess up this. Trust me, because I have so many experience that I have a very tight routine and I not manage my time. So if you want to trade full time, you must have a solid routine. So you're not going to in front of the chart 24 hours. You only have the forecasting, follow the forecast, so you can execute anytime when the price show you. There's no surprise there, and you're not taking FOMO trade if you have the system and routine in place. That's all for this week. Hopefully you guys take the value, you guys take a notes what value that I dropped today. So happy trading and goodbye. Thank you for watching. Subscribe to our YouTube and follow our Instagram. Bye.